Welcome to Beyond the Money Radio with Jackie Campbell. Jackie is a certified financial planner, CPA, personal financial specialist, and founding partner of Campbell Company Wealth Advisors and CPAs.
I'm always a firm believer that prior planning pays, and you're never going to get to something if you don't even know where you're at and what path you need to take to get there.
Campbell Company has been a staple in the greater Tampa Bay area for over 30 years, serving residents from Trinity to Orlando, the Villages, and beyond.
We're focusing on where you're at, what changes you need to make, what you need to stop doing, what you need to start doing, and what you should continue doing.
Now, because there's more to life than just finances, let's go Beyond the Money.
Actually, this weekend, there's more to life than just taxes. Let's go beyond the tax filing with Jackie Campbell. Hey, welcome out to Beyond the Money Radio and the Beyond the Money podcast, 352-251-1015, mycampbellandco.com to meet Jackie Campbell and the team. My name is Mark Owens, and I feel like I need to play some spa music, some like Zen music. Jackie, how are you doing? How's the team doing at Campbell Company after what is your Super Bowl week?
Oh, they're doing great, but I would say instead of spa music, it's probably more like Ella Langley. I just want to be her and not have to work so much during the first part of the year. But yeah, it's been an interesting season, right? Lots of tax changes, lots of refunds, massive amount of refunds this year. A lot of people writing checks too. So big changes just depending on what was going on in your life. So taxes is just a deadline. It's not an all year plan, right? So that's important to distinguish.
Yeah, we're going to have a heavy conversation this weekend because it's on our mind. We're always thinking about taxes, especially this time of the year, but we're going to try to reinforce the fact that Jackie Campbell and the team at Campbell Company, they don't just think about your taxes middle of April. They think about it May, June, July, August, September. And there's a difference between tax prep and tax planning. But before we get to that, what did you find that most people, you said a lot of people were writing checks, a lot of people were getting refunds, a lot of changes. What were some of the big changes this year, Jackie?
Oh, wow. One thing for those that are still working, tips, tax-free tips. I mean, that's a big thing. If you didn't pay attention to that, that's extra, input that you have to do. It's not something that's a click of the button and automatic. So you want to make sure that that was taken care of. If you had any tips, if you were self-employed and had, tips, make sure that was addressed. Like even there's a big, thing about DoorDash Granny online, saving $4,000 in taxes. I mean, I've seen some really big, great savings for some of our students and some of our younger, anybody working part-time like that in the hospitality industry. So something to pay attention to there. And overtime, I would say across the board, Mark, if you were an employee and you had overtime, not all employers actually put that on the W-2. That was a new tax law passed last year. So saw some pretty good reductions there. So it kind of, it's encouraging to be able to quantify the tax savings there so that you know that you're really and truly making overtime and you're getting to keep the majority of that money. So, it's a great time of the year. But it's not just all about the numbers. It's not about the money with us here at Campbell Company. It's the life that's behind the tax return that we really try to pay attention to.
Right. Let me give that number, 352-251-1015. Maybe you feel like you're just exhausted from writing the check to the IRS every single year. You're thinking about your tax strategy. We invite you to reach out to the team at Campbell Company because now more than ever, let's get ahead of it for next year. That's why there's a difference between tax planning and tax prep. And this is what you've taught me, Jackie Campbell. Tax prep is looking in the rear view. Tax planning is looking forward. And that's what you do every day.
It's so important to distinguish that anybody can prepare a tax return. You don't have to have a license. You don't have to have a degree. All you have to do is do the free file online because, they don't even have the old eraser and pencil kind of preparation, which is where I started out many years ago preparing tax returns. But, having the ability to make sure that looking back, what are the patterns? What's the history? What was last year? Making that as accurate as possible. And, then looking at what's going on now. Well, what's different? Just because you had a tax due and estimated payments last year doesn't mean you're going to have it this year because maybe your income sources are different. So it's looking at the past, getting that in compliance, getting this year's done, what's going on now, adjusting for it, pivoting, and then planning ahead for the future, right? So some tax changes that were on last year's taxes don't hit you, those nuisance taxes, until 2 years from now. When you turn 65, your Medicare taxes, for example, could be affected 2 years from now, up to $5,000 approximately per person. If you're married, that's a pretty big number, right? For the same insurance that you had the last year that everybody else gets. So having the ability to look at all those things, I think can really add great value to you. And nobody ever, well, I'll take that back. I did have somebody tell me, I don't mind paying in taxes. I just don't want to send up a red flag. So, I don't think they really said I want to pay more in taxes, but
Right.
they were just being, cautious in some of their, deductions that they were looking at and considering. So, but most everyone wants to pay the least amount of taxes legally possible, and why not? Now is the time to start planning ahead for this year. Don't get caught off guard. This is just really an important part of your income for the year. It's not what you make. It doesn't matter what your gross salary and compensation is. It's what you get to keep after taxes.
Let me ask you, and I don't know if this is a cliche or this is true, or you always hear people say, oh, I had to write a check, to the IRS. That means they didn't take out enough. But people also get angry when they say, oh, I got a rebate back. That means they took out too much. So is there a happy place when it comes to how much you write the check for or how much you get back? Or you want to try to be as close to zero as possible? Like, what's the general, way of thinking?
Well, we call that the Goldilocks planning. And,
Right.
we want to have it just right. But, every year is not going to be perfect. There's going to be things. There's going to be tax law changes that are going to be in your favor. And, hey, you take every single one of those that you can get. There are intentional things that you can do, maybe adding more to your retirement account each and every year just to get under that next tier tax bracket. So, we have some great tools that we use to try to find some really good spots for everyone. But, Mark, everybody doesn't like planning. Everybody is not willing to take the time and be as proactive as they could be and that will benefit them, right? So we say we do that as a company, but we have to have willing participants too, right? You can only, lead a horse to water, as they say. You can't make them drink. So, but just to see and hear some of the feedback of some of the tax mitigation strategies that we helped some of our higher income, higher net worth clients with last year, just significant impact and a lot of excitement about that whenever you can do some planning in advance before the end of the year. Really, it's all history once you get past to January.
Yeah. That number again, 352-251-1015. Having a good conversation this weekend with Jackie Campbell about your tax strategy. And I was telling you off the air before we got started that we're getting a bit of a refund in the Owens household this year. And I was laughing because I said, well, Gretchen, let's go have some fun, maybe take a little vacation. Well, my wife, who is the CFO of the family, goes, no, you idiot. We got to get ahead of it. Let's pay off a couple of bills. And most importantly, let's put some of that money away into savings. And of course, that's just the difference between me, the director of fun and entertainment, and my wife, who's the director of finances in the household.
That's right. Having a plan for things like that when you have a windfall, it could be, lost property, some unclaimed funds that you collected that you didn't even know were out there. It could be an inheritance. It could be, a bonus from work, but have a plan in advance. And if you're married, oh my goodness, so important to be on the same page, we call it. I'm sure your wife did not say you're an idiot. And sometimes we have to remember that, love is patient, love is kind. And that's been my mantra for this past week. But just trying to make the best decisions that we can. And, it's tough, Mark, because I've seen many that, they were taught, since they were a child, had some really good influences, some really good mentors. And, we had the conversation just recently, and it was, I've won the game. I'm 65. I don't need to keep saving for the future. I don't need to keep investing. I can just save and not spend everything that I already have now. But I was taught from 9 years old to not be lazy, to work, to save for the future, because if you don't, you're going to be eating dog food or cat food. And, that just they can't unprogram themselves, but it's just having that conversation and being aware and giving yourself permission to spend. So I really do think there's a balance in there somewhere about maybe having a little confetti, having a nice dinner or a little bit extra, like a spa day or something, or just a day out at the beach, whatever that may be, but then planning for the future. And, interest, if you're not earning interest, you're paying it. So you want to make sure you're paying attention to that, especially with interest rates on credit, personal credit going up. So very, very great plan. She's a smart one. You've got to keep her there.
When you work with Jackie Campbell and the team at Campbell Company, there are 6 components to a solid financial plan. Always thinking about your income, always thinking about your risk, most importantly, always thinking about your taxes. 352-251-1015. If you've saved at least $500,000 or more for your financial future, that initial consultation, no cost, no obligation. If it's on your mind, we invite you to reach out just to sit down and have this conversation. Multiple locations across the Nature Coast. They can meet you at a time and a place that fits your schedule. 352-251-1015 or online at mycampbellandco.com. Jackie, one of the biggest misconceptions for a lot of adults, once they get into retirement or close to retirement, they think, oh, around tax time, once I retire, those taxes, they're going to be significantly lower, or they may even just go away. How is that a big myth or misconception?
It's not true for many people. And if you only have Social Security and maybe some interest and maybe a small pension or a little bit of income coming in, then that may be the case for you. You might, with those extra big, beautiful bill deductions, that extra $6,000 potentially, helping save taxes on your income. If your income's low enough, you might be right. You might pay less in taxes, but I love the conversations, Mark, where I'm sitting with a client, sitting with a couple, and we're talking about how their Social Security benefits are way more than they ever paid for their first house 50 years ago, and how they never imagined what kind of income they would have on their tax return in their retirement. So it is just, it's great to kind of reminisce with them and hear what they made, their first paychecks and their first W-2s and tax returns, and how much they were raising families on compared to what they have in retirement. Just passive income, Social Security, a pension if they're fortunate enough to have one, multiple streams of income, and have taxes as a concern in retirement. So, but prior planning does pay. So having money in that tax-free bucket, the Roth, can certainly be a long-term game and a long-term play and a long-term advantage. So if you're not sure what you should do, if you should put money in a pre-tax account or put some in a 401k or versus a Roth 401k or a Roth IRA, give us a call. That's what this is all about. It's about planning, analyzing your personal life, your tax life, your one financial life, and seeing what is going to be the best recommendation for you. And whatever you're doing this year, maybe a little bit different recommendation next year. So being ready to pivot, having a financial advisor who's going to look at your one financial life. That's what we try to do differently here at Campbell Company. And all it starts with is a phone call, 352-251-1015, or you can go online at mycampbellandco.com.
You just mentioned a Roth conversion. I want to have a deeper conversation about that here in a couple of seconds. But tax-free retirement, especially now over the past couple of weeks, 6 weeks or so, a lot of commercials saying, give me a call. I'll make sure you have a tax-free retirement. Hey, if you call me and work with me, you won't pay anything in taxes. Is there any truth behind that, or are those clickbait, or are those wealth managers maybe need to do a little research before you make that phone call? When you hear tax-free retirement, is that possible?
Well, I think that there are possible tax-free retirements for sure, and there are tax mitigation strategies, but typically that's not going to be just for everyone. It's going to be for somebody who's a higher net worth. You have to be qualified to be able to use some of those tax strategies, but the tax code is written, and there is opportunity all over the place. But working with a professional that is experienced and has the ethics and the education, I think those are 3 really, really important things to consider. Do you just pick up the phone and call a 1-800 number? don't know. I don't know that I trust all of that. And you're right. You do hear, a lot of late night drives home lately. So been listening to some of the infomercials that are out there, and a lot of things about paying the IRS and taxes and investments and how you should invest. And it's easy to have those blanket kind of commercials and statements, but uniquely that's really what has to be evaluated.
352-251-1015. Trust and verify. And that's why the team at Campbell Company offered that initial consultation at no cost, no obligation. An opportunity to sit down with Jackie and the team and see if you're going to be a good fit for each other. It's not like you walk in and you have to sign on the dotted line. You have to work with Jackie. Doesn't work like that. That initial consultation, no cost, no obligation. mycampbellandco.com, or again, 352-251-1015. You mentioned Roth conversions. Now, I heard an analogy once about a Roth conversion. I want to see if you agree with this. A Roth conversion is like the equivalent of being grounded versus getting a spanking. All right, so with a Roth conversion, you get the spanking, you take the taxes up front. Yeah, it hurts a little bit, but then the pain goes away. But with a Roth conversion, you could also get grounded where you pay the taxes over time. So is that fair to say that a Roth conversions, you can either get the spanking or get grounded?
I don't know about you, but I got both.
Amen,
you
sister. Amen.
You didn't just get grounded for some things, but it's a different life, different generation, I guess. Now, I'm not so sure about this gentle parenting thing. But I never thought of it like that. I mean, I think that's probably a pretty good analogy. But when you have a traditional IRA, traditional 401k, it's not just yours. It is partly theirs. THE, IRS, the IRS.
Yeah.
So, whether that's going to be 10, 20, 30, 40% of that, depending on if somebody lives in a taxable income state, I mean, that's another, 4 or 5, maybe 13% tax. So definitely, your situation where you're going to retire at, that's why a lot of people are moving to Florida, because we don't have that state income tax here. And oh my goodness, if we start getting a bigger break on our real estate taxes here for those that it's their primary residence, I mean, that's going to be a huge, huge additional tax incentive here in Florida. So, we've got the world's most beautiful beaches all over the Gulf. I mean, to me, that's the most beautiful part. So, and, we get warmer weather the majority of the year. Well, some unbearable months, but that's why we have air
conditioners. It's a little steamy. That's true. As we're talking about taxes here this weekend and Roth conversion specifically, is there a specific age where it's best? Because, every weekend here on Beyond the Money Radio and the Beyond the Money podcast, by the way, you can find the podcast, stream it from the homepage at mycampbellandco.com. I feel like we're talking to a lot of adults in that red zone of retirement, 5-6 years away from retirement, maybe a couple of years into retirement. But what about those adults, late 40s, early to mid 50s? Is that the right time to be taking advantage of a Roth? Or is there really, you shouldn't put an age on a Roth, because anybody should take advantage of one?
You should not put an age on a Roth, because there's going to be different periods in your life where your income is going to be down. Maybe somebody is in school, have some upcoming physicians, right? They're going to be in those early years where they're not making a lot of money, but that's a really good time for them to start those Roth conversions. You've got children that are in college. Maybe that's a good time to mix some of those things up. But you got to be careful, because there's about 7 different nuisance taxes that we look at. We have it so that you can see right down the chart. Where's my income, and what am I knocked out of, and what am I really close to, or how much more income. Sometimes $1 can be $1,000 net difference. So really, really understanding taxes and planning. You can't just assume your tax professional is going to know everything going on in your life. You have to do your part and communicate. So that is an important aspect of it. But whether you're going to do the Roth, I don't think it has an age limit. I think, even if you're, I call it more in your legacy years, right? If you're in your 80s and you have money still sitting in an IRA and you don't need those required minimum distributions, it's probably going to be a good thing to consider. Where do your children live? Where do your beneficiaries live? Are they in taxable states? Because that's what I'm seeing. And then, they would much rather hey, I would rather more go to them, my beneficiaries. I don't need this money. Let me help pay the taxes now. they're not going to have to pay state income tax on it. That's a huge benefit. They're high income earners. They're the 37% tax bracket. They do really, really well for themselves. I hear that often. So why not make it as beneficial as you absolutely can now and for the future? But it all starts with a financial plan. Many times they want to come in all excited to do the Roth conversions because they hear I should do a Roth conversion. And I do the analysis and I say, I really think you should just stay doing what you're doing. There is a minimum that I think should naturally stay in an IRA unless you get to those legacy years where it's a different conversation about who's going to inherit that money because you're not going to need it or spend it. So again, there is no blanket answer in my professional opinion. It's about doing the timeline. If you ever see me, I like to use a whiteboard. I like to draw on my paper, whatever I can find to draw on, and find out where you're at, how old you are. If you're 65 and your wife's 63, or wherever you're at on that timeline, where are you at? What are those major birthdays coming up? And what are the tax advantages and opportunity periods? And where are those nuisance taxes going to kick in for you? And when you could see the visual of where you're at today, it's like playing a game. It's a real game of life. It's a real game of let's figure out the tax game and what is going to be the best for you. It's not going to be the same as your neighbors. It's not going to be the same as your family members. It's not going to be the same as somebody on TikTok trying to tell you what to do. I get those little TikTok things forwarded to me all the time. Sure. Oh, why aren't we doing this? Shouldn't my estate plan have this? It's about those blanket statements. They can get people in trouble if you're not doing the proper research and working with a professional that's going to help make sure that one decision that you make is not going to have a different impact on your taxes, on your income, on your investments, and on your legacy. I'm just seeing that again and again and again. I feel like a broken record over here.
Yeah. And you just mentioned it online, social media. They're called finfluencers, the financial influencers. And we've said it before here on Beyond the Money Radio, Beyond the Money podcast, trust and verify. A lot of these people are just finding information online and just reporting it as their own to get the reels, to get the views, to get the monetary, achievements behind it. So if you hear something, sure, they may sound like they know what they're talking about. They may have all the accreditation, but if something feels off, you got a bit of a red flag, but you got some questions about what they're talking about, we always invite you to reach out to the team at Campbell Company. 352-251-1015. Again, 352-251-1015. And as we're talking kind of some myths and misconceptions in taxes and retirement, there are people listening to the show this weekend, and they've heard those 800 numbers. Those people that say, hey, give me a call, I'll give you a tax-free retirement. Well, they're really located up in New York, Chicago, or L.A. It's a misconception, Jackie, that when we work with Campbell Company, we're never going to see Jackie Campbell. We're not going to meet Jackie Campbell. Not so fast. You live here, you work here, you play here. You're proud to call Florida home.
Absolutely. I mean, I don't know why you'd really live anywhere else. I've pondered that a lot. I've got some favorite places. I would say Lake Tahoe is one of my very favorite places in the United States. But I love Florida. You can, be near some mountainous areas and some hilly areas in a very, very quick amount of time. And you've got such great weather here the majority of the year. And I love sunshine. I don't know how people live in states with no sunshine. But you start seeing patterns for people that retire to Florida, live in Florida. And, it's just about asking the questions. We work with, a lot of business owners, right? So we're going to see patterns, what type of things are going to be coming next for them. And they may not even realize it. But what a great conversation to be able to, be proactive and try to help them navigate through things that they've never gone through before. Like the first time you're a parent, you don't know what you're doing. I mean, when I grew up, we didn't have anything but a book and another family member who was kind of giving you advice. Now you've got, all this influence all over the place and the internet and the AI, models telling you what to do and everything. But, you just don't know until you actually retire what that's going to be like. And it's not just the financial aspect, it's the emotional aspect that goes with it. So business owners, helping them get ready to potentially sell one of their largest valued investments, their business, and they're emotionally attached to that for so many reasons. But it's not just about picking a day and planning a retirement. It's about, what if something happens and you have to be a caretaker, or you are no longer physically able to do that? And many of us business owners have this false sense that, oh, our kids are going to take over the business like we took over for our parents, or that, we put so much blood, sweat, and tears in this business. Surely they grew up seeing the value, but the kids go exact opposite direction. They don't want to have anything to do with all that responsibility and pressure. So it's just about figuring out what's going on with you and what is the best decisions to make your future bigger than your past. And law enforcement, that is another one, working with public safety officers. I just can't say how grateful I am to all that are willing to serve and protect our community and others, people they don't even know. And I guess I just took that for granted for so many years, because Scott, when we started dating, he was just going into law enforcement. My brother went into law enforcement, relatives in law enforcement. So I just kind of was always that was normal for me. But now that Scott's retired, I see it, differently. And, I have a nephew that just went into law enforcement, and, you know him, Mark, the talkative one. To be a firefighter, be a paramedic, and just some of his stories that he's already seeing at a young age, and to see how he's matured. And I would just run the exact. I'll call and get you help, but I'm going to be going the opposite direction. I could not. Do what you do, but all the tax benefits that you're able to take advantage of each and every year while you're working or in retirement. Those are the things that kind of frustrate me, that, they're simple, but there's a lack of awareness among the tax preparer or preparation community. So that's something that I really want to pay attention to a little bit more and help guide them, because they really do not make what they should for the sacrifice that they're willing to take. So thank you to all of our first responders, all of our military. I really, really do appreciate everything that you do for our community. And then those that are looking to retire, maybe they don't know the date, maybe they don't have the confidence, maybe they're like, the other, gentleman that I had spoken to, who's kind of afraid that they're going to have to, live off Alpo the rest of their life. Whatever your case may be, let's have that conversation. Let's see where you're at. Let's look at the whiteboard, put your age and the year on the calendar, on that whiteboard rather, and let's map it out and see what a good 360-degree retirement roadmap will be for you and your family and your individual scenario. It's all going to be tailored just for you. And it all starts, Mark, just with a phone call, 352-251-1015, or you can go online to mycampbellandco.com, and right there in the middle of our homepage, we have a place that you can put some comments, and, whatever that is, just write it in there. Want to look at your tax plan for this year, want to look at your investments. Maybe you're nervous about the market, or maybe it's, an income plan. Like, I don't have a pension. I don't have a pension for my retirement. And now how do I turn all these dollars that I've saved in my 401k, my 403b, my 457, or my whatever type of tax plan that it is, that's a retirement plan, how do I turn that into an income stream? And even a step further, if I'm a business owner and I'm going to sell my business, now how do I turn that into a paycheck, because I'm going to need one in retirement? Those are the things that we help you with, that 360-degree retirement roadmap. And again, it all starts with the phone call, 352-251-1015, or online at mycampbellandco.com.
Now, the Beyond the Money tip of the day.
taxes. We just got through talking about that, a lot about it. I know everybody's kind of tired of it for the moment, but if you filed an extension or you just completed your tax return, now is the time to do the tax planning during the spring of this calendar year to make sure that you're all set for this next year. Because again, it's not what you make, it's what you keep. And whether you're getting the job, you're getting engaged, you're getting married, you're getting divorced, or maybe celebrating your 49th or 50th wedding anniversary, whatever those big milestones are, now is the time to let's plan for what's next so that we don't have big surprises next year, and make sure that you're looking at your one financial life for the year.
352-251-1015. Good conversation this week about taxes, because it's not just on our mind in April. It's on our mind throughout the year with the team at Campbell Company. 352-251-1015. That initial consultation, no cost, no obligation. Of course, always online at mycampbellandco.com. From the homepage, you can meet the team. And we invite you to stream the Beyond the Money podcast. You can find this weekend show and a full archive, all commercial free. Again, mycampbellandco.com. Well, Jackie, as always, thank you for the education and the information this weekend. And I hope you get to catch your breath and maybe get a well-deserved day off. We are back next weekend, but before we get out of here, let's give you the final word.
I hope everyone has a great weekend. I'm going to be spending mine with my granddaughters and looking forward to that, and hopefully some beautiful weather for the rest of the weekend. And if you're looking for clarity, confidence, and direction, and you're not sure what to do next, just pick up the phone, 352-251-1015, or you can go online at mycampbellandco.com. Doesn't have to be this weekend, but you can always reach out, but be intentional with your financial plan, because you only have one financial life. This is Jackie Campbell, Certified Financial Planner and Certified Public Accountant of Campbell Company Wealth Advisors and CPAs. Join us again next time on Beyond the Money Radio and the Beyond the Money podcast.